Hi ladies and gentlemen, welcome to SA Accounting Academy. Here's a short clip on one of our previous webinars. I hope that you really do enjoy it.
Good day and welcome to this webinar dealing with IFRS 16 leases. And this is of course the standard that replaces the old IAS 17 on lease accounting and has implications specifically applicable to lessees. So I hope that you find this webinar very informative and enjoyable at the same time. Then just before we start, a disclaimer that I think you should just take note of. Whilst every effort has been made to ensure the accuracy of this presentation and handouts, the presenters and authors, the organizers and all other parties do not accept any responsibility for any opinions expressed by the presenters or author, contributors or correspondents, nor for the accuracy of any information contained in the handouts. And then of course I just want to obviously bring to your attention that the webinar is protected by copyright. Okay, asking questions, you're welcome to type your questions and interact with us during the webinar. If you look on the right hand side of your screen, you'll then see a chat box where you can ask your questions and they will be answered during the webinar. At the end of the session, there'll also be a brief Q&A session where you can ask any further questions that are still unanswered. So now we'll be commencing with the content of IFRS 16 leases. All right, so moving over to IFRS 16 on leases, I thought it was necessary to just start off by bringing to your attention the fact that there have been some changes that have occurred to the conceptual framework. And I thought it a good idea to just, to the extent that it impacts IFRS 16 on leases, to also make that a part of the agenda for this webinar. So on the slide in front of you, you can see that the agenda is that we'll quickly be paying attention to some of the amendments that occurred in the conceptual framework. And as I indicated, only those that impact lease accounting. And then the webinar itself will be dealt with in 5 chapters. Chapter 1 being the introduction to IFRS 16 and the reasons for amending the actual the concepts in IFRS 16. Chapter 2, what is a lease and how to identify a lease in a contract. Chapter 3, just having a look at the lease term itself. Chapter 4, looking at lessee accounting and how the lessee is required to account for leases. And then lastly, from the point of view of the lessor, what is required in respect of IFRS 16. Now just in summary, the major impact of the new IFRS 16, of course, lies with the lessee, because the risk is also with the lessee, and we'll talk about that slightly later on. So especially, we'll feel the impact of IFRS 16 from the point of view of the lessee. Moving on to the changes that have been effected to the conceptual framework, already becoming effective in 2018. On slide number 13, you can see that the first amendment that we should take note of is the fact that there is a brand new definition of an asset. Now, what we need to just take into account is that small changes to the definition of an asset, they could be small when we look at them, but the impact of those changes could be felt quite significantly. So although the amendment might look very insignificant, the impact is bigger. So the old definition is that an asset is a resource controlled by the entity resulting from past events from which future economic benefits are expected to flow to the entity. All right, so now the new definition says the following. It is a present economic resource controlled by the entity arising from past events. So the first thing that we need to see is that we have a new concept called a present economic resource. Now, a present economic resource was not defined as such in the previous conceptual framework. And the new conceptual framework, or let me rather call it the amended conceptual framework, says that a present economic resource is a right, as you can see there. Now, before we move on, a right. When we look at the future of assets and liabilities, the future is going to lie in the ability of unpacking assets into the rights that are embodied within that asset. And you'll see that part of the change that has been effected to IFRS 16 in terms of lessee accounting for leases is the ability to look at an asset and to say different rights that relate to the same underlying physical asset can actually be accounted for by different parties on their statements of financial position, being the balance sheet, of course. So if we're going to get stuck in looking at a building as the physical structure, and that means that that physical structure is merely one asset that belongs on one party's balance sheet. Let's talk about balance sheet to keep it simple. Then we're going to not really feel comfortable with the changes that are brought about in our IFRS standards recently. So that whole concept of one asset could embody, for example, the right of ownership, incorporating the right to sell the asset at the end of the useful life of that asset, the right to use the asset, etc. Now, why this is important is if we start unpacking rights that are contained within assets, and we unpack obligations that are contained within liabilities, then we can account for those rights and obligations in several sets of financial statements, and it would be providing information that is more useful to the stakeholders of that particular set of financial statements. So a present economic resource, in summary, is a right. So we need to look at assets as rights. Now, this right must have the potential, and I put that in bold on slide number 13, this right must have the potential to produce economic benefits. Now, immediately what is important, you see in front of you, the portion that relates to the expectation of future economic benefits has been removed from the definition of an asset, which means if you compare the concept of expecting future benefits and comparing that to the potential of economic benefits, you can see that it is simpler to actually satisfy the requirement of potential future economic benefits versus expected future economic benefits. Now, many people might immediately feel that this is going to open the door to recognize more assets that are not substantiated, etc., and fictitious assets being created and assets being artificially inflated. Remember one point. We are just talking about the definition of an asset here. If you satisfy the definition of an asset more easily, that doesn't mean automatic recognition on the statement of financial position takes place. You still need to satisfy both the recognition criteria in order for that asset to be recognized. So yes, the net seems to be cast, but it seems to be cast a bit wider in respect of assets, and the same change has actually been effected to the definition of a liability. All right, that expectation element has been removed from the definition, but then again, our recognition criteria are in place to make sure that we can't just recognize anything on the statement of financial position. So it's very important going forward that two things are kept in mind. Number one, assets are rights, and number two, these rights have the potential to produce economic benefits. And that whole concept of, in the definition already, there's the expectation of future economic benefits. That has been removed from the definition. Now that has an impact on whether an item would qualify in terms of the definition to be called an asset and then to be considered for recognition. Moving over to slide number 14, the second amendment that I thought is important for you to realize is that our recognition criteria, which we have just spoken about, have also been amended. Looking on slide number 14 now, The old recognition criteria used to say that an element will be recognized in the annual financial statements if it is probable. And probable meant more likely than not. So if it is probable that future cash inflows or outflows will result, obviously depending on whether we're busy with assets or liabilities or income or expenses or equity, etc.
I hope that you enjoyed that video. For more of our webinar videos, go to www.accountingacademy.co.za. Thank you and have a lovely day.